Hello dear Forex traders, welcome to IFC Markets. You are watching weekly market overview on IFC Markets YouTube channel. Let's start. The Swiss franc and the euro were the best performing currencies the previous week against the US dollar. They have strengthened against the dollar by 1.48% and 0.84% respectively. The British pound performance turns negative after 4 consecutive weeks of positive momentum, declining by 0.21%. Moreover, on the negative side was the Aussie falling by 0.24%, followed by the Canadian declining by 0.35%, and next the Japanese yen lost for another week. Lastly, the US dollar overall was squeezed the last week, printing a minus 0.50% performance amid euro and Swiss strength. The last week was full of events, starting the last Monday with improving Chinese manufacturing PMI indicators, which held the USD JPY at more than 6-month peaks at 103.36. The currency pair was one step away from 5-year highs, but eventually the resistance at 103.36 limited bullish bias, forcing the pair to correct to 101.62. The USD JPY returned on Friday to its recent highs and is threatening to reach 5-year peak above 103.36. During the previous week, asset tapering became a more likely scenario for the coming months as the growth data and employment data for US were improving. The US GDP preliminary figure rose to 3.6% for the third quarter, beating estimates a 3% advance. In addition, US non-farm payrolls jumped to 203,000 for November, higher than market participants' forecast of 180,000, and above October revised NFP of 200,000. Unemployment rate declined from 7.3% in October to 7%, surprising markets that were anticipating a 7.2% number and approaching further 6.5% threshold of Fed forward guidance monetary stance. Despite improving data, though, for U.S. economy, the U.S. dollar index declined from 80.95 to 80.20. However, we still expect the greenback to resume its upside. Concerns arise, though, because speculations for partial withdrawal from the Fed's $85 billion monthly bond purchases in the coming months did not lift the US dollar except against the Japanese yen, suggesting that this is already discounted by market. Moreover, the European currency was driven by central bank comments. The European Central Bank held its key rate unchanged last Thursday at record low at 0.25%. At the same time, ECB President Mario Draghi at its press conference lessened possibilities for negative deposit rates, while raised growth forecast for 2014 to 1.1% from 1% and predicted growth of 1.5% in 2015. The euro versus the US dollar ended the week at 1.3701, representing a more than a month peak and suggesting that upside bias prevails. Our expectation is that the pair could climb and retest 2-year peak at 1.3829. On the data front, the coming week starts with major growth data for Japan, which was already released as of Taiping Weekly Overview. Japan's revised GDP for the third quarter dropped to 0.3% from preliminary figure of 0.5%, disappointing traders. For Monday, Eurogroup meeting could develop to major events. Also, Bank of England Mark Carney speaks and could reveal some clues on future monetary stance. Following the latter, the most important events of the week would be Chinese industrial production and GDP manufacturing data on Tuesday. Next, on Wednesday, we will be monitoring New Zealand monetary policy statement. Lastly, on Thursday, Australian employment data, SMB monetary assessment, and US retail sales will be monitored. While Friday is going to be a quiet day in terms of news, only US PPI would hold our attention, based on economic calendar. You are watching weekly market overview on IFC Markets YouTube channel. Do not forget to subscribe to our YouTube channel and follow us every Tuesday. Goodbye.